Well, folks, this market is getting very interesting now at this point in time. A lot to share with you in today's video. I want to go over some important metrics, things going on in the market, some views I have on the market, kind of where we're headed here and whatnot, and what's about to transpire. Obviously, we're going to talk about Amazon earnings. I'm going to take you through the entire Amazon report, show you what I thought was good, what I thought was bad, what I'm planning on doing with that stock now at this point in time. We're going to talk about Meta in this video and a few other stocks as well. So busy video, action-packed. I appreciate everybody joining me as always. Thanks so much, folks. Let's get straight into this, okay? First place I actually want to start out with two photos I took of something I saw on CNBC here today, and I thought this was important, okay? So what this shows you is the S&P 500 top 50 stocks versus the Russell stocks, okay? And I mean, it's pretty clear that basically since about SVB happened, there's a insane divergence that has happened here with kind of the biggest stocks and kind of a flood to money for the biggest stocks in the market and a run out of more of the, let's just call it smaller players. And this is one of the biggest divergences, I mean, you can see on record. I mean, a 14.5% up and a 6.7% down for the Russell stocks. Now, do I think this is going to continue? I don't think this is going to continue for much longer. Whenever you see an insane divergence like this, it always ends up closing back. It's just the biggest question is, does it start to close back within the next couple of weeks, or is it in the next 1 to 2 months? That's the only question, because I can promise you this always closes back. And next thing you know, you get Russell stocks to the upside. Maybe you can get S&P top 50 stocks to maybe kind of flatline for a bit, or potentially go down and they kind of meet in the middle type situation, okay? That never really lasts. Now, this is a really intriguing one, okay? This shows you the QQQ versus if you're going to do it like an equal weight. So as far as the Qs go, basically the biggest stocks are like an overweighting of that particular index, okay? For this particular index, everything is equally weighted out of those 100 stocks. And you can see that the real big upside is coming from the biggest and the largest of the large companies, while many of the others are, let's say, kind of lagging, okay? I mean, basically, the big dogs are like 2xing what the rest of the stocks are doing out there, okay? And so, once again, this will not continue forever. It's just a matter of time before things let's call it, get back into alignment. But it has been what's going on. It's important you understand kind of what's been going on in the market and in those sorts of things, okay? Now, obviously, phenomenal day for me today out there, right? And I hope it was for you guys as well. We were up $73,000 today in the public account. Absolutely insane, massive day, right? And it was led by Meta. And this was this stock alone we were up $53,000 here today just in the public account with my Meta shares, $53,000. So, now, the interesting thing about that is, okay, the stock could have been up a lot more. But why was it not up even more, okay? And it had a good day, but it could have been up even more. There was something I thought held back the stock, actually. I think the stock could have made an 18 to 20% move here today. But there was something that happened on that conference call. And what happened was they left the door open for more potential hiring in 2024. And that is I don't want to say a change of approach, but on the last conference call, and especially, if we even go back to the last two conference calls, Zuckerberg really was talking about efficiency. They're still talking about efficiency. But the fact that all of a sudden now they're opening up the door to more potential hiring in 2024, it leads people to kind of look at it and be like, wait, well, what's going to happen here? How much are they going to add to the employee force? Like 3%, 5%, 10%, 20%? Like, it leaves the door open to more uncertainty in terms of bringing down costs. And I think that actually held back the stock price a little bit here today. We need to get more clarity on that. Because, no one wants to see Meta go on a hiring spree again. I can tell you that. No investor out there wants to see Meta all of a sudden add up the employees again and get into a bloated cost structure again, okay? Zuckerberg has done so well with investors the last couple of quarters as he was talking about efficiency, streamlining the organization. And they did a bit of that on this conference call. But leaving that door open, that scares folks out there. Like, oh boy, what are they about to do here? Hire again? As far as me in regards to Meta, I was obviously, I'm happy with the move Meta makes because I'm I'm happy with the position I built out. I don't need to buy more shares of Meta stock. I feel comfortable with what I have. Do I mind buying more Meta shares if the stock was to go down? Sure. Do I want to consider selling the stock? Absolutely not. It's not even close to being a sell for me. At this point in time, for me now, it's kind of a hold. And if we get any major drops, I'll end up picking up more shares of Meta, but I feel comfortable with my position. I mean, it's a $400,000+ position in the public account, and that's a portfolio that has $1.4 million. So, yeah, it's a pretty heavy weight in there, right? And obviously, I put 222 into it, so basically it's about almost doubled up now at this point in time in terms of amount of money. So I don't worry about getting too overweight because of a stock going up in price. I more think about it in terms of me adding the position, actually putting the money in the stock. Tesla became such a big weight over time in the portfolio because the stock price went up. So I never really trip off that, okay? Now, interesting thing is, the dividend account lagged majorly today. This account was only up 1%, which goes to show you the difference in let's call it more of a risk-on market versus a risk-off market, right? And last year, the dividend account held up incredibly well, while the public account was getting slapped all over the place. It was nasty, right? But then you see what happens and the difference between these accounts when you get some risk on activity versus risk off. And when we get some risk on activity, this account is blowing up, right? I think this account entered the year maybe at $1 million or so, and look where it's at now versus the dividend account, which hasn't really done that much, to be honest, this year in terms of kind of, the movement as far as that goes. But the ultimate account, my best account in my opinion is actually this account, okay? This is the Patreon portfolio. This is a perfect portfolio. And the reason I view this as a perfect portfolio is this is a type of portfolio I built here that is many times is exceeding the market on the upside, but also not doing as bad as a market on the downside I'm finding on many days. And it's kind of like the best risk-reward profile of any of my portfolios. I absolutely love it. It's obviously a super small portfolio because we just started this year, right? But it's the perfect balance. And you even look at a day like today, right? Public count up 5%, dividend count up 1%. This is that happy medium, right? It outperformed all the indexes today, and by quite a substantial margin. So it's the perfect portfolio, in my opinion, kind of what I've been building out there. And by the way, if you're looking to access all the moves I'm making, which I am making moves in my Patreon portfolio tomorrow, make sure you get in there ASAP if you want to get in for the $10 tier, because that's about to go bye-bye, the $10 tier, and whoever's already in there will be grandfathered in, and then whoever's not in there will not be allowed to be in there, essentially. So yeah, if you want to take advantage of that, that will be pinned comment down there, okay? Amazon. So Amazon's been my number one focus as far as a stock I'm buying here in 2023 for many various reasons, and mainly because of the upside I believe the stock has over the next 3 to 5 years specifically, okay? We're up to about a $77,000 position in the public account as of right now. It is also the biggest position I have in the Patreon portfolio as well. It's an overweight position for me in this portfolio, and if Amazon, does what I think it's going to do over the next several years, it should, continue to be the biggest stock in that particular portfolio. Now, the stock initially was up big after hours. It was up 8, 9, 10%. Now, from what I've seen, the stock's kind of flatlining at this point in time. We'll talk about why that happened in just a moment here, which I'm like, thank goodness, because my view on Amazon is I'm not done buying this stock. I want to buy the stock for the entire year, so I do not want this baby to go on a run. My biggest fear going into this earnings, and I told you guys this, 3 or 4 days ago, my biggest fear was this stock being at 120 plus after hours. Sure enough, it went to 120 plus after hours, but now it's come back, and we'll talk about what happened there essentially, okay? So to go through these numbers here, net sales up about $11 billion on a year-over-year basis. It's up 11% if you adjust for foreign exchange there. That's strong. Strong growth from Amazon. I'm very, very, very impressed. 60% came from North America segment, 17% came from AWS, and international made up 23% of sales as far as that goes. But very happy with net sales, okay? Now, net sales on a trailing 12-month basis. This is a large number here, okay? From $477 billion on a trailing 12-month basis revenue or net sales to $524 billion on a trailing 12-month basis. That's up 13% if you adjust for a foreign exchange there, okay? 62% coming from North America, 16% AWS, and 22% international. Now, this is where things get fairly shocking, okay? Fairly shocking. Check out the operating income for this company. Operating income came in at $4.7 billion. approaching a $5 billion number in Q1. That's obviously up substantially year over year. That's up 26% if you adjust for foreign exchange there. Now, up 30% on a year-over-year basis, just raw numbers. But it's an incredible, because here's the thing. I think this is a low mark number for the year for the company by far. I think second quarter, third quarter, fourth quarter are going to be immensely better for operating income for Amazon. So this is something I look at that I'm like, okay, things are headed in the right direction here and better than I actually anticipated, much better than I anticipated. As far as net income loss goes, $3.1 billion of net income for this latest quarter from 338, but do keep in mind that's because of a certain situation I'll discuss in just a minute. This is another number that I'm expecting to blast higher. Remember, a lot of the cost-cutting measures they're taking are actually going to take effect. Really, you'll start to see it show up in the numbers in the second quarter and third quarter. When a lot of these companies announce, including Amazon, they announce these layoffs or whatever you want to call them at the very end of 2022, in the beginning of 2023, right? So all that has to play out. It's not like all of a sudden right away those expenses are going. You have to go through all the departments. You have to get all this done. You have a bunch of restructuring costs. You have to cover people's salaries for a certain amount of time. There's all this crap that goes into that. And it affects you negatively from your number standpoint for at least 1 to 2 quarters. And then it rolls off, and next thing you know, you kind of see things rolling out with your new cost structure of your business. And so expect the second quarter to even be stronger for the company, the third quarter and fourth quarter to be fully like, oh my gosh, like Amazon's becoming a profit machine, a net income machine now at this point in time, okay? So I'm definitely very, very thrilled with that. Now do keep in mind, this is important, okay? Q3 2023 net income includes a pre-tax valuation loss of about $500 million, okay, $500 million, included in non-operating income expense from the common stock investment of Rivian Automotive, compared to a pre-tax valuation loss of $7.6 billion from the investment in Q1 2022. So if you didn't know, basically Amazon owns a massive position in Rivian stock, okay? And Rivian stock's obviously been going down and down and down. This is like a pretty much a 1-year chart of Rivian. The stock's down almost 60%. It's been down and down and down and down. So now the interesting part of this is if this stock actually bottoms here and starts going up, which I think is actually a realistic possibility. Like if you told me I had to own another EV company that wasn't named Tesla, I would buy Rivian if I had to be forced into a situation like that, okay? I don't personally own Rivian, other than I obviously own Amazon, which owns a ton of Rivian. But yeah, this is one stock I would actually be interested in. I think they're going to make it long term, and I think they are going to be a successful company. How successful, I don't really know. I haven't gone that deep into it to actually think, I think they're going to hit this margin long term or this profitability. But I do think they're one of the few EV companies that will make it through this messy time period out to the other side, and especially with having the Amazon backing. So if this baby actually starts to go up as this year kind of takes on, that would actually be a positive to Amazon's net income. I don't think it should be that way. It's just the way they do general accepting accounting principles nowadays, okay? I don't think it's the way it should be, but it is the way it is. So do keep that in mind. If this baby goes up, it will help Amazon's net income rather than hurt its net income, because basically for the past 12 to 18 months, the last 4 to 6 quarters, it's just been pretty much working against Amazon quarter in and quarter out in regards to that, okay? Now, and if you take this apart a little deeper, segment results, North America, they're making great progress on operating income, okay? As far as net sales, up 11% on a year-over-year basis here, from $69 billion to almost $77 billion, right? And keep in mind, that's with a weaker consumer environment out there, right? We saw in 2022 the weakest consumer sentiment we've ever seen in the history of the Michigan consumer sentiment, right? So progress is being made specifically on operating income, from $1.5 billion operating loss in Q1 of 22 to now, getting close to $1 billion of operating income for the company this latest quarter. And this is, once again, a number that I'm expecting to go boom, boom, boom over this next, let's call it, few quarters here. So progress is being made. I love that. As far as the international, yeah, this is not in a good place, okay? Net sales were only up 1% year over year. Now, do keep in mind, if you adjust for foreign exchange, you're at 9%, so there's a huge discrepancy there. Operating loss down 3% on a year-over-year basis, down 16% if you adjust for foreign exchange. So this business is, I think, going to probably continue to be in a tougher place in the short term. I do believe that it's going to look a lot better for the company in 2024, but I do think this is just a segment that's going to continue to kind of be weak in a weaker environment here in the short term. So I'm not expecting anything to get massively better here. Now, AWS, I got to say, as far as the revenue number, I was actually really impressed. Up 16% year over year. Okay, I was not expecting that from Amazon Web Services. Much stronger and much better than I expected. No, as far as operating income, not impressed by this. We're still kind of on a downtrend here from operating income of AWS. We got to reverse that at some point in time, okay? This has been the actual moneymaker for Amazon. I do believe e-com is going to make them a lot of money long term, and I do believe, Prime and everything they got going on there is going to make them a lot of money long term. But those businesses haven't really done much for their bottom line for quite a while. Let's just put it that way. But AWS has, and so this is not something you want to see this trend reverse. We need to see this trend reverse in as far as operating income at AWS get in a healthier place than it's been. Free cash flow, great progress in terms of this, right? Over $18 billion of negative free cash flow there, to this on a trailing 12-month basis, do keep that in mind, to now negative $3.3 billion, and I expect that to go positive here very shortly, and then obviously up and away. So great progress, up 82% on a year-over-year basis. That's incredible, okay? So progress is being made. The green numbers I have here are basically good numbers I like. The red is numbers I don't like, okay? Now, I was actually impressed by net product sales. They came in with growth year over year. Now, is it much growth? No, $500 million, which isn't much for Amazon. But keep in mind, UPS, they reported negative 6% revenue numbers, if I recall, okay? So that made me actually fearful of wow, could as far as product sales, could Amazon be negative? And to come in with growth, I was happy with that after those UPS numbers, okay? Now, net service sales obviously came in with a tremendous growth, over $10 billion of growth there. And so I was happy with overall revenue growth of, nearly $11 billion. I'm happy with that. Cost of sales, I'm also happy. Didn't see a huge uptick in cost of sales, so I'm happy with that number. Fulfillment, didn't see a massive uptick there. I'm happy with that. Technology and content, not happy with that. They grew almost $6 billion on a year-over-year basis. Technology and content, they've been spending like crazy there. I hope it pays off, but not thrilled with that in this environment. Sales and marketing, also not thrilled with that, up almost $2 billion on a year-over-year basis. As far as general and administrative, that's fine. That's in line, okay? As far as total operating expenses, up almost $10 billion on a year-over-year basis. Not happy with that. I would have loved to see that be a much lower number, but really it's coming from that technology and content area. That's killing them right now, okay? Operating income, happy with, obviously being up nicely on a year-over-year basis. Income before income taxes, $4.1 billion, happy with that. Do keep in mind, once again, last year they had that huge Rivian expense in there, so do keep that in mind. And net income obviously being positive, $3.1 billion. Happy with that. EPS came in better than I expected. I was really scared that they were going to miss as far as EPS went. For them to come in with a nice beat, analysts, I believe, were at 22 cents of EPS expected. For them to come in 31 cents. Happy with that overall. So overall, the earnings were better than I expected. They were, no doubt, they were better than I expected. As far as balance sheet goes, this once again looks at a quarter-over-quarter basis, not a year-over-year, but total assets were up nearly $2 billion on a year-over-year basis here. And as far as total stockholder equity, that's a pretty substantial move there to $154 billion from $146 billion in the same quarter, in the previous quarter, okay, on a sequential basis here. So happy with the balance sheet overall, happy with the income statement, and overall the earnings were better than I had feared. Now, in regards to Amazon's stock price, right, it started to obviously move down after hours, which I'm like, thank you. So what happened here, okay? Well, I'll tell you exactly what happened here. Basically, the company is talking about AWS coming in slower for growth in the April quarter, okay? And so that caused a bunch of fear about what are the numbers going to be. So basically, this stock went from being up 10, 11% after hours at one point to now, who knows, it could be red tomorrow. We'll see what happens, okay? So this is like best case scenario for me because my bottom line is for Amazon, I'm buying this entire year. Until this year's over, I'm buying this entire year for Amazon. So I want as many shares as possible for as cheap as possible. So thank goodness they pulled that a rabbit out of their hat and, hurt the stock in the short term. I can understand for people that are maybe playing short-term calls and things like that. You're not happy with this, okay? You want it just to be positive vibes. But for me, this is the best case scenario. The worst case scenario was the stock just goes on a ripper and, it's 120 plus tomorrow and, heads to 130, 140. I want as many shares for as cheap as possible. Thank you for that commentary, Amazon. I appreciate it. Thank you, everybody, for joining me as always. Thanks so much, folks. I'm glad you guys enjoyed the channel. Thanks for being subscribed. Glad you guys also enjoyed the reaction channel. If you are looking to become a member and apply to join my private stock group, the private wealth group, and level up your investing game, check out the description area. That will be for an application. If you're looking to see the moves I'm making making in the market. That'll be Patreon. That will be pinned comment down there. Make sure you get in there ASAP before that $10 tier goes bye-bye. Much love and have a great day.